welcome back to Money Talks. I'm Mia Lee, escort, stripper, CPA, and recovered banker. Today we're going to talk about art and collectibles, but more importantly, I'm going to answer a question that I have answered for a lot of you in private, but now for my viewers, I'm going to answer the age-old question of whether or not a Birkin bag actually outperforms the S&P. When we think about art and collectibles, this is actually a huge universe that encompasses much more than luxury bags. We're talking about everything from sneakerheads collecting Yeezys and Jordans, to music lovers collecting vinyl, to even boomers collecting classic cars. I myself am a 911 owner, proud and big fan of 911s. At the heart of the luxury good market is the fundamental principle of microeconomic supply and demand. The value of any item is determined by what someone is willing to pay for it. Everybody knows that. And that's influenced by the item's availability and consumer desire. In the case of collectibles, it's often driven by limited availability, much like the strategic production of Hermes Birkin bags paired with significant demand, and this drives up prices. The scarcity principle creates an exclusivity factor that can elevate an item's desirability and therefore drive up the price and its consequent market value. Exploring this a little bit further, microeconomics involves understanding consumer behavior, market equilibrium, and price mechanisms. When a luxury brand like Chanel or Hermes releases a limited product line, they're controlling the supply side of this equation. Assuming the demand remains high due to the brand's prestige and the status associated with owning such items, prices are naturally going to soar both at the store and potentially even more so in the secondary market. This is the classic case of a market responding to controlled supply and very robust demand. Let's talk about returns and appreciation. I want to point out that not all luxury items or collectibles follow the exact same trajectory. While some Chanel and Birkin bags have historically seen their values increase by 10 to 15% a year, akin to stock market returns, others haven't really fared so well. This variance underscores the importance of market research and risk assessment when evaluating investments, including but not limited to collectibles and luxury items. Success stories in the collectibles market, much like those in financial markets, are often highlighted, but they don't represent every outcome. A classic example of this is that people who own Birkins probably also own Fendi's, Gucci's, and Bottega bags. Not all of these items are going to appreciate at this 10 to 15% a year. In fact, a lot of these items are going to lose value. A 2019 study conducted by a consulting firm called Knight & Frank found that Birkin bags appreciate on average 13% a year, which on the face of it would seem that Birkin bags outperform the S&P, which appreciates on average 10% a year, but not so fast. There's a really big countervailing factor here, and that is liquidity. Liquidity just means how easy is it for you to turn your investment or collectible item, in this case, into cash. And we need to understand this because commissions from platforms like The RealReal or Poshmark or auction houses like Sotheby's and Christie's can run you upwards of 45%. Let's put some numbers to this. Let's say you spend $10,000 on a Birkin bag and you hold it for 2 years, and after 2 years you need the money, you resell your Birkin bag. This Birkin bag is appreciated about 13% a year, so using round numbers here, we're going to say you sell it for $13,000. But you had to sell it through an auction house or a company like The RealReal, and they took a 30% commission. So at the end of the day, you paid $10,000 for the bag 2 years ago, and you're really only pocketing $9,000 after this commission because, again, remember, liquidity. In this scenario, you've basically lost $1,000 over 2 years, and you probably got some benefit, intangible as it may be, from using this beautiful bag for 2 years, but as a financial investment alone, you lost $1,000 in 2 years. When you consider the opportunity cost of, let's say, a stock portfolio or a bond portfolio that would have been positive value over the last 2 years, it's really not looking like a very good investment. This is the point in the video where you're probably like, well, Mia, I wouldn't pay Poshmark or The RealReal or Christie's a 30% commission to resell my Birkin bag, I'll just do it myself. And to that, I would ask you, do you really think that even if you have a background in fashion, you have an extensive network, that you can outperform a company that has spent millions of dollars on marketing and brick and mortar stores and building a reputation for decades in this industry, in the case of certain auction houses? Do you really think you can outperform this company doing this on your own, right? And the answer might be yes, but it's probably no. It's kind of like asking me if by picking individual stocks, I, with my 12 years of experience in finance, can outperform hedge funds and investment banks like Goldman Sachs. And I would still say no to that, right? Like, I still buy ETFs. I don't pick individual stocks because I don't think that I can outperform these market movers. And similarly, I think for the majority of my viewers, you probably are realistic when you come down to it and think about it in knowing that you're not going to outperform an auction house or a platform like The RealReal. Not everyone who's paying this 30% commission is doing it because they're a lazy idiot, right? Like, people are paying these commissions because this is the way that they get optimal value for their luxury items, e.g. Birkin bags. If you want to feel a little bit better about this 30% commission, fun fact, The RealReal went public through IPO in 2019 at $20. And as of February 2024, when I wrote the outline for this podcast, its stock was trading below $2. Even with their 30% commission, The RealReal's struggling to manage their business and resell luxury items. That's neither here nor there, and I'm almost certainly going to get dragged for saying this, but no, your Birkin bag does not outperform the S&P once you factor in transaction and liquidity costs, unfortunately. That being said, it's still okay to hold some collectibles and art and luxury items in your investment portfolio once you meet certain financial requirements for accepting this level of illiquidity and risk. Generally speaking, I would say you first need to have 3 to 6 months in emergency savings. And you also want to be on track, not necessarily having accomplished already, but on track to meeting all of your long, medium, and short-term financial goals. We're talking about things like education, home buying, retirement. Your Birkin bag is beautiful, but it's not big enough to live in. It's not going to pay for an education. And you're not going to be able to buy things that you need in retirement with said Birkin bag. You're going to have to convert it to cash after liquidity costs. Let's say you have met all of these financial goals. You have 3 to 6 months in savings. You are on track to meeting all of your long, medium, and short-term savings goals. And you now want to allocate a certain percentage of your portfolio to luxury collectible items. How much do you allocate? I would say no more than 5%. That means that if you have a net worth, meaning assets minus liabilities, of $1 million, you can spend 50 grand on Birkin bags, which I guess nowadays only buys you about one. I'm not a fashion person. Those of you who know me in person know that my clothes are made by a tailor. They literally have negative value. No one's rebuying clothes that are tailored for me. I have some designer shoes, but I just wear them around the city. I really don't think my severely worn Jimmy shoes that I have resold every couple of years are holding much value. 2005, fun fact, is the last year that Porsche made hydraulic steering, and I'm kind of a semi-old school gearhead. I love my manual transmission and manual steering. I am pretty attached to my 911 because it's an '05, but I don't really consider her a part of my investment portfolio. I mean, I suppose if I really needed the cash, I could sell the car, but not really counting on it. Before I conclude this episode, I want to talk about a couple more things, and one is the macroeconomic trends that are driving luxury goods and collectibles. The growing allure of consumer discretionary items, particularly in the luxury segment, is really propelled by this broader economic trend. As a middle-class population expands around the world and the wealth of the global elite rises, the demand for high-end collectibles is only going to climb. This increase in purchasing power and the desire for luxury experiences and items really drives the market for exclusive items like Birkins and Chanel bags and Porsches. It makes them more than just products, they're status symbols. And the last thing I want to touch on is the interest that a lot of members of our community have in either producing art or supporting the arts. The reason why a lot of billionaires have art consultants is because art is a very opaque world. Even if you have a background in fine arts, it's really, really challenging, and you would know better than I would if you do have this background. It's really challenging to verify authenticity and provenance and do the adequate research and even get the adequate information to determine if an art piece is going to appreciate in value. I'm going to present you with a more conservative alternative. There's something called art shares. And there are companies like Yield Street that basically will hold these art portfolios, and you can buy a fractional share of that art portfolio or even a specific piece of art, similar to buying shares in a gold ETF without having to physically custody that gold. Art shares might be a great way for you to diversify your holdings and support the arts without having to assume all of the challenges and complexity and liquidity and insurance and storage costs of owning physical art. That concludes my episode on collectibles and arts. Thank you so much for watching. Please drop me your questions, comments, and suggestions for future content.